Hello, ladies and gentlemen. Globerex back again, and I am back with a beautiful topic. I tried my best to make everyone become a profitable trader step by step. And today's topic, I'm going to be talking about adjusting your position size relative to your risk. Okay, now this is a very interesting topic whereby most people do not talk about. We talk about strategies, technical analysis, fundamental analysis. Trading patterns and so many things, that build the ecosystem about trading. You talk about the Lambo, the flashy lifestyles of trading, but most people don't really talk about the key factors, the things in which you need to have in place in order for you to grow over time into that, profitable trader. And a very interesting thing and a very crucial thing about it is adjusting your position size relative to your risk. This is something that I cannot emphasize as much as possible on it. Take for example, I'm going to give an instance. We have two traders, trader A and trader B. They are taking the same analysis, the same signals or whatever it is. Like I always say, I'm not against taking signals from anybody. It depends. So far the person is profitable, okay, you can take signal from that person. I'm not against it. Or you can also derive your signal yourself. But I want you to understand, I'll be switching to Bybit, where we'll talk about, the practical and how I will show you guys how to actually adjust this your position size relative to your risk. But stick with me while I kind of break it down first before moving into the practical aspect later on in this video, where I'll be explaining how you can do it. So now we have trader A and trader B taking the same signal or the same analysis or whatever it is. Now probably the account size is maybe $1,000. The account size is $1,000, and in a $1,000 account, you want to be risking around 1 to 2%. So 1% of $1,000 is $10. So ideally speaking, both of them are supposed to be risking $10 per trade, right? Now, trader A, let's say they take 3 trades in a week, 2 wins, 1 loss. Okay, first trade, trader A risked 10%, 1%, which is $1, while trader B risked around $1 also. Sorry, $10. I'm mixing the percent and the amounts together. Forgive me. Okay, so both of them risked $10 each on a trade, and it was probably a 1:2 trade. So both of them made a profit of $20 on the first day. Now, the second day of the week, trader A risked 20%. Oh, sorry, $20, which is like 2%. He increased his risk, while trader B kept his risk consistent. He still kept his risk at $10 per trade. The two of them took the trade, right? When the two of them took the trade, it was a loss. Now, trader B, or is it trader A, won $10 the other time. I mean, he won 20, which was a 1:2. Now he risked 20 in the second trade. Now he's back to break even because he made 20 the day before, and then today he's making a loss of 20. Instead of him to have lost 10, like trader B lost 10, still having a plus 10 in his P&L. Now, the third day, due to the loss trader A had, because now he's in break even, he's scared. He reduces his risk to $5 per trade, while trader B still keeps it at $10 per trade. Now, on the third day, the trade is a profit. What happens? He risked $5, trader A risked $5, made $10 profit. So now trader A at the end of the week, after taking 3 trades, has $10 profit. While trader B, who took $10 again the third day, made profit of 20. So 20 plus his 10. Now he has $30 at the end of the week. You see, both of them took the same trade, the same everything, but the difference in their profit was simply because one kept his risk consistent, and while the other one had inconsistent risk. So now both of them took the same thing, but one of them is coming out with a profit of $10, while the other one is coming out with a profit of $30. That is the importance of keeping your risk consistent per trade. You don't want to have scattered losses. You have $10 loss here, $20 loss here, $50 loss here. It's just scattered. Keep it consistent. So that way, when you have a high win rate, high risk to reward ratio or whatever it is, and losses comes in between, you don't really get emotional or mentally broken down because you made $10 today, you lost 20 tomorrow, you made 10 the following day, you lost 50. You don't want to do that, right? So enough of the talk. Let's move into the practical aspect where I'll be showing you guys on Bybit, how you can adjust your position size relative to your risk. It doesn't really limit you to just Bybit. It's the same interface with all every other crypto exchange like Binance, BingX, BitGet, or whatever it is. You just need to know how to adjust your position size. That way, your wins and your losses, or your losses most especially, is controlled and consistent. All right, let's go.
This is a 100K account, and I usually use it when I'm trying to test out some kind of strategies. But let's use it to actually explain how you can adjust your position size relative to your risk. Okay, so first things, you want to choose the pair you're trading with. Okay, I choose Solana because I mostly trade Solana. Now, next thing is, most of you have a kind of constant leverage you use, a very constant leverage you use. Let's make it something relatable. I know most people trade on 20x, so let's say 20x. Because you're seeing 5 here doesn't mean I trade on 5 all the time. I actually adjust my leverage according to my position size, but that's another video for another day. This one is actually how to adjust your position size relative to your risk. Okay, there is also adjusting your leverage relative to your position size, but we'll do that later. Now, let's say you trade 20x. Now, how much are you willing to buy this Solana for? As of the time of making this video, Solana is around 816 point, 5 something 60 fluctuating. So let's say you want to buy at 150 USD. Okay, that is set. The price in which you want to buy is 150. Now, how many percentage of your account are you willing to risk on this trade? I personally do risk 1% of my account. Some people risk lesser, some people risk more, but risking more than 2% of your account is not ideal in proper risk management terms. So let's say 1%. Now, this is another common mistake most newbies make. Because I say I'm risking 1,000, because 1% of 100K is 1,000, right? So because I say I'm risking 1,000 on this trade, they'll go ahead and put 1,000 like this and say, yeah, they're risking $1,000 on this trade, which is very, very wrong, because you putting 1,000 doesn't mean it's actually $1,000 you are risking. Look down, you see quantity 6.6 Solana, you see cost 50.56, which means on this trade you're actually risking, I mean, the position, the amount in which you're using to open this position is $50, 50.56, and not 1,000. You see, that's a very first mistake most people don't understand. Because they put 1,000 here, they think actually they're opening this trade with $1,000. But always look down. It doesn't matter any broker it is you are using, it's all the same. Binance, Mexi, BitGet, BingX, whatever it is. Look down, you're going to see cost. That is how much you're actually opening this position size with. And we said we want to use 1,000, right? Correct. So let's put it at 20K. Now you can see in the cost here it says 1,021.19. We don't want it more than 1,000. Okay, let's put it at 19.5, 19.8, or 19.7. Okay, perfect. Now at 19.7, the cost of this trade, I mean the amount in which I want to use and open this position size, is 1,005.87. So the 5.87 is really irrelevant because that's very, very small. Okay, so now can you see I put in 19.7 in the space of USDT. Some people think, oh, he's opening the trade with 19,700 USDT. No, look at the cost down. It means I'm opening this trade with 1,005.87 dollars, right? Don't ask me why is it different. That's how the brokers were made. Okay, my own is just to teach you how to use them effectively. Okay, that is how the brokers were made. Oh, why is it 19.7 and then it's, I have no answer to give you regarding that. You just have to follow how the broker was created. That's it. So next thing is, we know how much we want to risk, which is 1K. So which means on my 100K account I am willing to always risk 1%, which is 1K. It doesn't matter the trade I take. I'm risking 1k on my trade, right? And I want to buy this Solana at 150, which means once the price drops to 150, I'm buying. Now, moving on to the stop loss and take profit. So let's say I'm buying at 150 and my stop loss is at 145. Are you getting it? 150, stop loss is at 145. Now, you can see here that my expected loss is what? 656.5. 656.5. So now in this trade, am I actually risking 1k? No. I'm risking 600. I purposely did it this way so people will understand, because most of the time when you tell someone that what is your risk per trade, they think it is how much they are actually opening that trade with, which is the position size. The position size and risk per trade are different. So most of the time they think it is the position size that is how much is at risk. So which means if I open this trade with $1,000 and my stop loss is at 145, my expected loss is 656.5. So this is my risk per trade. My risk per trade is 656.5. And what happened? I wanted to risk 1,000 per trade. So now what happens? I need to adjust my position size, which means I cannot open this trade with 1k. I need to open it with more than 1k. Okay, so let's put it at 25 25k. Put that 25k and then put this at 145. You see it's changing, right? Now my expected loss is 833. Still not what I want. I want 1k per race. So that means I need to keep adjusting my position size, which is how much I'm going to enter this trade with. So if I say let's try 35 here, which means I want to open this trade with like 1,000. Look at the cost, 1,787. What's going to be my expected loss? 1,166. Okay, now it is more than 1k. We need to reduce the position size. So reduce the position size to like, let's say 32 here. So 1.6, still much, still much. We want to make it 1%. 31. So now the position size is 1,582. You can see it in the cost there. And my risk per trade is expected loss, that's 1,033. Still much. I need it under 1k. So this is the process in which most people don't tell you about. You need to know how to adjust your position size relative to your risk. So people just enter and then they end up having scattered losses, like I said earlier. All right, so let's put it at 30. So now check exactly. So you can see now, if I buy at 150, my stop loss is at 145. My expected loss is going to be $1,000, which is 1% of my account. So look at it. In reality, I'm entering this trade with 1,532.17, which is my position size, the cost. But the only amount at risk is not the whole 1.5. The amount at risk is 1k in that trade. Now let's say your take profit, you're buying at 150, your take profit is at 160, 1:2. So they are risking 1,000 to make 2,000. Expected loss 1,000, expected profit 2,000. That is how you always adjust your position size relative to your risk. So you are always losing the same amount of money anytime you lose. You don't have scattered losses up and down. You are adjusting your position size. Okay, so now expected loss is $1,000, expected profit is $2,000. These are things you can't analyze on TradingView, or if you took a signal from someone, or this is you yourself. You need to know how to adjust it. yourself. Okay, so let's try other pairs. You don't just use Solana. Okay, let's try BNB. Let's try BNB against USDT. So in the BNB, I'm going to be more faster and not slower because I took my time to explain slowly in the Solana. So now BNB current price is 665.50, right? Or let's say we want to buy it at 650. Let's say we want to buy it at 650. Okay, we want to buy it at 650. Uh the other value, which is the position size, let's say we want to put in hold on, let me untick this. You want to buy at 650, right? Order price. My stop loss is at maybe 645, and my take profit is, if I'm buying at 650, so my take profit is at 660. So 1:2. Okay, confirm. Now we've done that. We've input our entry price, we've input our stop loss, and we've input our take profit. Now we need to adjust our position size relative to our risk, because currently now it's showing me expected loss 382. This is where most people don't get it. They just enter the trade like that, which means in your first trade probably you lost $1,000. In this trade now, maybe you hit your TP, you make 764. It's not consistent. So it doesn't matter how well you know how to trade or how well your win rate is. If your position size is not constant, most of the time you will win more than you lose, but at the end of the day, the month, the week, you are still in a drawdown, or you are not making as much profit as you should have been making. So now let's adjust the position size here. uh let's increase it probably like 10% here, which means the cost to open this position size is going to be $10,000. So if it's $10,000, let's see, expected losses 763. Still too small, which means I need to open this trade with more. Let's try 15% of my account. So now you want to open this trade, the position size is 15k. Out of your 100k, you want to put 15k to open the trade. That's your position size. Now if you are opening the trade with 15k, doesn't mean 15k is at risk. You want to risk just 1k. So let's check. Right now it is more than 1k. Expected loss is 1145. You need to bring it down a bit, so it's at 1k. So this is 148k, right? Try 140 here. So let's try opening the trade with 14k. A little bit too much. This is 1076. I'm going to adjust it here to 135. So now let's say if we open this trade, the position size with 13,640.92, right? Following the derived signals you should have gotten from your analysis on TradingView, or probably if someone gave you a signal to take. I'm not against collecting signals. It's not, so far the person is profitable, right? So expected loss 1,038 bucks. Still too much. We still have to adjust. Now let's put it at this. Okay, so now 13,135. Let's check. Now we have it. So the same way we took a trade on Solana with a fixed risk of 1,000. Now this BNB trade, I'm also risking 1,000 here to make what? 2,000. So two different trades, two different signals, but at the end of the day, I kept my risk consistent by adjusting my position size relative to my risk. Okay, confirm. So now, if you look at it, I'm entering this trade with 13,135.85. That's my position size. Doesn't necessarily mean that if I lose this trade, I'm going to lose my whole 13k. No. What I'm going to lose here is just 1k. So shall we try another last pair and explain, so you get me totally? And if you don't, you can keep rewatching this video for as many times as possible until you get it. So my last pair I do trade is AVAX. Currently, I trade three pairs, depending on the setup. So, AVAX. Now, in AVAX price is currently at 38.665. Okay, 38.665. And probably I want to buy AVAX at what price should I put? Let's say I want to buy AVAX at 25. So when AVAX is at $25, we want to long it. It depends. This is just an example kind of signal to explain. The value, let's put 5% of my portfolio. And TP and SL, if I'm buying at 25, let's say my stop loss is at 20 and my take profit is at 30. Is it? Or 35, right? So now you can see here is showing expected loss to be 16,119.5. That is way too much. And most people will not understand or how to adjust it. They just place the trade like that. So look at this. Look at this. I'm going to enter this trade. If you enter it like that, okay, the cost of this trade is what? $3,312, which means you're actually going to risk 3,312. Like that's your position size, right? But come and look at the expected loss. The expected loss is 16,128. That is way, way, way above even how much I'm using to enter this trade with. So now you might be surprised, but I entered this trade with 3K. How did I lose 16K of my account? So you need to know these basic things I don't really see most people talk about on YouTube. You need to understand. So the fact that you're entering with 3K doesn't mean you're going to lose 3K, or doesn't mean you're going to lose lesser than 3K. You need to adjust. I keep repeating this. It might sound annoying at this point that I'm saying it over and over, but I just want you to get it. So we have to reduce. Let's reduce this to like uh put that 5K like this. So now look at this. Okay, my leverage was 25x. Let me return it to 20x. You know, all right. Hold on with me. All right. So in this position, the cost for my position is what? 255.36, which means I'm going to enter this trade with what? 255.36 position size. Buying at 25, my stop loss is at 20, and my take profit is at 35. So now come and look at this. Now I have expected loss of $1,000 and then expected profit of $2,000. So I have successfully adjusted my position size relative to my risk. So that is how you go about it. It doesn't matter what pair you trade, whatever it is. Most of the time, each analysis is not going to be the same. You might have a wider stop loss on one, a tighter stop loss on another, different pairs. But it is your duty to be able to adjust your position size relative to your risk. So it doesn't matter what trade you take, it doesn't matter what pair you trade, it doesn't matter how many times you trade. At the end of the day, at the end of the week, at the end of the month, you ended up risking the same amount per trades. So that way, when you have a higher win rate, a higher risk to reward ratio and all, even if you lost a couple of times, your wins will be able to cover up for your losses because you were not risking 1K on this, 5K on that, 2K on this, 500 on that. You kept your risk consistent. That way, you end up being profitable at the end of the duration you set for yourself, right? if this video actually helped you, understand something, added knowledge into whatever you knew, I'll just like if you like this video, drop a comment on whatever it is you don't understand. I'm willing to help, and share, subscribe, and I'll see you guys in the next video. Cheers.